All right, guys, welcome back. The price of XRP is driven by market supply and demand, but the sources of demand are tied to its role in payments right now and liquidity on the XRP ledger. But I'm here to tell you why, maybe a pivot down the road could be in the cards for XRP. And for anybody who holds the token or coin, you're going to want to stick around because I got some interesting things to share. I've got some insight. And so a lot of people would ask, is XRP purely speculative? Not really, but speculation is still a major driver today. A lot of what, we're looking at is hopefully seeing XRP used as its core utility purpose, which is liquidity for payments. So XRP was designed as a bridge asset, right? For moving money between currencies. It sits right now at the center of the XRP ledger, which can settle transactions fairly quickly, 3 to 5 seconds. So obviously the example that we always use, Bank A wants to send USD to Bank B in Japan. Instead of holding USD and putting into JPY liquidity in accounts globally, they can go from USD to XRP to JPY pretty seamlessly, right? This process is called on-demand liquidity, and it's used by Ripple. But the bigger question is this still going to be a use case? Because XRP is fluid in terms of its price action, right? Do you want to be using a currency that fluctuates from price to price, or would you rather use stablecoins? And it doesn't mean XRP is done. It just means there might need to be some more use cases, which there already are. And one of the reasons why I'm super excited about XRP is tokenization. We'll get into that later. But unlike Bitcoin, XRP was pre-mined. So it does have a total supply of 100 billion XRP. We do know roughly what the distribution looks like. 55 billion of the 100 billion were placed in escrow by Ripple, essentially off the market and basically safe. Now we've got 45 billion roughly circulating or distributed out there to the public. So every month, 1 billion XRP is unlocked from escrow, but most of it is usually then relocked if it's unused. This means the circulating supply grows slowly and predictably over time, which I like. We do have a transaction burn mechanism in place. Every transaction on the XRP ledger burns a tiny amount of XRP. It's not a ton, but the hope is when it's used a lot more, that every payment will be burning this small amount of XRP, and it actually stacks up to be very meaningful later down the road. Over many years, it could create a deflationary asset in XRP. Then we get into the liquidity flywheel effect. If XRP becomes widely used for payments, which I think has its flaws now with stablecoins, which we'll get to, meaning more transactions, more liquidity required, larger market depth, higher valuation than potential. The theory is global payment flows can now require large XRP liquidity pools, and that is the long-term utility bull case. But Ripple's influence, which is an important distinction here, is what I want to address as well. Ripple and XRP are related, but they're not the same thing. Ripple's the company, XRP's the asset. So Ripple builds enterprise payment software. They promote XRP for liquidity. But XRP trades independently on exchanges. It's used outside Ripple's products. It's running on a decentralized validator network. However, Ripple adoption strongly does affect sentiment and demand for XRP. But most of that is speculative. But what if we create rails where XRP is utilized within tokenization? Because right now, we got to be real with ourselves. Speculation is still a huge driver. Right now, much of the XRP price movement comes from regulatory news, exchange listings. Obviously, we're pretty much on all exchanges now, but regulatory news, any partnerships, crypto market cycles, ETF speculation, any kind of institutional adoption expectation. This is why XRP can move sharply even when transaction usage doesn't change. What I would like to see XRP do is move with transactions, move with the network. And the biggest XRP markets are crypto exchanges, liquidity providers right now, arbitrage desks, remittance corridors. So price can fall pretty dramatically if large holders sell. Now, the big bull case is if XRP becomes a neutral global liquidity layer for cross-border payments, it'll settle trillions in value. And that is still a case that a lot of people latch onto. I'm a little hesitant to latch onto that fully because of stablecoins, right? Banks may not need or want to use a volatile asset for settlement. Stablecoins could dominate cross-border liquidity moving forward. And what does that mean for Ripple? It means that we're going to have to pivot in order for XRP to have a use case, in my opinion. And I think that pivot is easy. I think it's tokenization. And if you want my opinion, I think they've been looking at this for a very long time, and they're going to be willing and able to make this big shift. XRP demand may remain mostly speculative if they don't make this pivot. But we look to a partnership already in the UAE with real estate in Dubai. And that right there tells me that the pivot is there on the table. If they go heavy into tokenization, they could create a avenue that most people can't see right now. So what if we created demand for the XRP token through tokenization of real estate in particular, which I think is going to be a massive, massive area of interest anyway? What would that look like? What could that actually look like? So tokenizing real estate would create a demand for XRP if they did it the right way, but it depends on how the system is designed. But I think it's still early, and we could see the XRP ledger, which can support tokenized assets. But XRP only will gain value if it plays a required role in this liquidity or settlement process, not just because the token exists on the network. So if a property, let's say, is worth $1 million, the issuer creates 1 million tokens. Each token is $1 share of the property. These tokens could trade on the XRPL decentralized exchange. Then real estate could become fractionalized and globally tradable. If a buyer wants to purchase the token but holds another currency, well, USD to XRP to the real estate token. XRP, again, still acts as the bridge asset for settlement. It's just not being used in cross-border payments that could be done by the banks with stablecoins. Every transaction on the XRPL could burn XRP. If millions of real estate trades occur, then more trades equals more XRP burn, slightly reducing the supply. So this is just me brainstorming. I want to see XRP tied to a business model, and I think it's still there, even if XRP isn't going to be the bridge for cross-border payments, if that ends up being stable coins more so than a currency that fluctuates, right? So I think tokenization could be massive. And real estate's one of the largest asset classes in the world. We know that. Global real estate estimated range of $300+ trillion. Even a small percentage of this moving on chain would be huge. If a small percentage of this is captured by the XRPL and XRP with fractional ownership, global investor access, instant settlement, 24/7 markets, this could be huge, huge. If XRP becomes a neutral liquidity layer between thousands of tokenized assets, demand could grow dramatically. And I think this is the big play. I've made these type of videos before, but I haven't had it fully flushed out. If XRPL becomes the tokenized asset marketplace, XRP could act like the oil that lubricates the entire system. And I think this should be the real big play for Ripple. Just my thinking, talking through it. Let me know your thoughts. Am I crazy here? What do you guys think? Do you agree, disagree? I'm curious to hear your thoughts down below. Don't forget to like the video, subscribe for more. Check out our free crypto newsletter link down below, and we'll see you guys in the next video. Peace.